Guys, good evening everyone. Well, my name is James Neon, alright, but you can call me Neon. So I'll be taking you guys on the strategy I use to trade my boom and crash, okay? This strategy, it works out for me and I've been using it to make profit. I cash out weekly, okay? I cash out weekly. So firstly, I'll have to tell you the indicators which I use. Well, it's the RSI, that is the relative strength index, and the moving averages. But I kind of include the what's it called, MACD and stochastic. So what I specifically use the MACD and stochastic for is for filter purposes. I will explain what this filter means when I'm done with this setup for the strategy. Okay, so the first indicator we'll be adding to the list is relative strength index. And how do we add it? We'll click on this F and we go straight to relative strength index. We add it. So usually this relative strength index, we set it to 1 to make it disappear. Okay, so we click on the parameters. Will be for the period is 1. Then for the we apply to close. Then for the levels, usually what we'll see on the relative strength index levels are 30 and 17. So I included 90 and 10 to it. So for the level 30, which is the oversold region, we click put it as buy. Then for the 70, which is the overbought region, we put it as sell. Then for the 90 region, which we put it as the strong sell. Then for the 10, we put it as strong buy. Okay, so for each of these levels, they have different things they do. Okay, I will explain that later. So how do you add these levels if it's not included in your chart? Let me, for instance, if I delete them all, okay, if I delete them all, for me to add them, I'll have to click on add. You see, a new level has been added. So for me to delete, I just delete it. So I've already entered them before in order to make the video a little bit fast. So now all you just have to do is for the 30, you click on it and you edit, you put your buy. For the 70, you put your sell. For the 90, you put your strong sell. For the 10, you put your strong buy. Right, then you have to click back, then click on done. This is how your chart would look like. Okay, so if you want to change the if you want to for the this line to show, all right, all you have to do is you have to click on this relative strength index. Then for this the levels, you have to change the color. If your background is black, you change this color to be white. If it's or change it to be white or any color that is transparent. Okay, not black, because if you include black to it, the levels won't appear. So let's get back to the chart now. So for the chart, the next indicator we'll be adding to this relative strength index is the moving averages. Under this relative strength index, we are going to add 4 different moving averages: moving average 50, moving average 5, moving average 3, and moving average 2. Okay, and this moving average, in order for you to add, you have to click on indicator window 1, not on the main chart. Indicator window 1 under this relative strength index. All right, you just have to click relative indicator 1. Then under the indicator 1, then you come to this trend, you add a moving average to it. Then you see moving average 50, the previous one I did before I deleted them is already there. So you click on this moving average 50. All right, it's going to be exponential. Then apply to close, then the pixel to, then your color should be whatever color you choose, but it should be different from the rest. Done, it's been added. All right, then the next one we'll add is moving average. The same process with the previous one. Here would be a 2. The period will be 2, exponential close. Then we'll have to change the color to a transparent color. Okay, so we'll click on done. All right, it's been added. It's been added. So the next one we'll be adding now is a moving average again. Click on the indicator window again, the same process. Add the next moving average, which is a 5 moving average, a 5 period day, moving average is going to be simple close. Then we change the color to a yellow, right? Yellow. So this is how it will look like. Then the next one we'll be adding is moving average again. Now it will be, the period will be a 3, all right? Simple. And we change the color to, let's say, pink. Done. This is how it will look like on your chart. So now that we are done setting this indicator, okay, what is the next thing to be added? For me, I like adding relative strength index to it. I like adding the relative strength index. So I have to go back to the chart. Instead of, the main purpose why I use this is for indicative reasons. I will tell you the reason later. So I'll go back and I'll put this one to 14 back. I know why I do it like that. It helps me a lot. So this is how it will look like when you include the relative strength index back to 8. Okay, so on the lower time frame, which is the 1 minute time frame, so for the conditions for you to use this strategy is this: for you to sell, you have to wait for this you have to wait for these indicators, these moving averages, to hit the level 90. All right, to hit the level 90, then you sell. You don't sell when it's at the middle. When it hits the 70 region, you don't sell. You wait for it to get to 90 region before you sell. Then same thing applies with the buy. You wait for it to get to 10, level 10, before you buy. You see, you wait for it to get to level 10 before you buy. Then when you buy, it will keep on going up, going up, going up until it hits to level 20, level 90 before it will start selling again. All right, that is the condition. So now that we've understood it, all right, you just have to wait for it to get to 90, and 90 you sell, 10 you buy. All right, you don't buy when it's at the middle, or when it has when you don't buy when it's at the middle, when it has not gotten to that level 10. You don't buy when it has hit 30. You wait for it to get to level 10 before you buy, and you wait for it to get to level 90 before you buy. You don't sell at 70. You wait for it to get to 90. All right, it getting to that 90 is telling you that the market is exhausted. It getting to that 10 is telling you that the market has exhausted, that it's time for it to reverse. You understand? So all you just have to do is patience. Apply your risk management, and boom, you are inside the trade. You are winning. One thing that kills most is you entering a large lot size and trying to make huge profit, and at the end of the day you lose all your finance, you lose all your income. The best thing you do is apply your risk management and follow these simple rules, and yes, you will win. Okay, so just maintain your risk management and you will win. Then the next thing I would like to show you guys is the filter that I mentioned earlier. How do you filter? This is what you do. You go to a higher time frames, you click on those higher time frames, then you will now include the stochastic. All you just have to do is click on main chart, include stochastic. Sorry guys, include stochastic. The stochastic should be, the parameters for the stochastic is 14. 14. Then you click on done. It's set. Then the next indicator you will include is the MACD. So what I specifically use this tool for is this: the I use the stochastic to check for the momentum of the market, the momentum of the higher time frame. In what direction is the higher time frame facing? Is it moving downwards or is moving upwards? All right, so we should try to understand that the higher time frame, the smaller time frames, are fragments of the higher time frame. They are pieces of the higher time frames. They make up the higher time frames. So Now if the higher time frame is selling, is telling us that the smaller time frames will also be selling. No matter the movement of the smaller time frame, it will definitely move to the direction of the sell in the higher time frame. All right. If we check for the 4 hours, if it's selling, we should know that yes, 1 hour will also sell at the end of the day. All right. So we should always, if we should always analyze the market with higher time frames, and we sell with if we analyze the market with higher time frames, then if we know that the higher time frame is selling or buying, then we will know that yes, we are selling or buying in the lower time frame. This is what I mean. Let's say I analyze the market that in 1 hour's time, this is the 1 hour time frame, that in 1 hour's time, in 1 hour time frame, that the market is moving downward, the market is selling. So what I will have to do is this: in this 1 hour time frame, in this 1 minute time frame, I wouldn't enter a buy trade in this 1 minute time frame. You understand? What I'll have to do, I'll have to be patient to wait for the these indicators to get to this level 90 before I'll enter the trade. I'll have to wait for it to get to level 90 before I'll enter the trade, because the higher time frame is showing that it's a sell. Then the lower time frame, I'll have to go with the higher time frame, because the higher time frame is the what will actually happen at the end of the day, because they said that the higher time frame, the signals in the higher time frame are more are more efficient than that of the lower time frame. So there are more false signals, there are more false that lie signals, more false signals in the lower time frames than in the higher time frames. So it's more profitable to trade in the higher time frames than in the lower time frames. So what we have to do is, when we analyze the market in the higher time frame, we come to the lower time frame to enter a trade. So if the higher time frame is trading sell, all we just have to do is to be patient enough to wait for this market now to get to this 90 level, then we sell. If it immediately gets to this 90 level, and the a relative strength index, it has gotten to this 90 level with it, you sell. Give it, let's say, within 1 minute, 2 minutes, you will see the market will crash. This market will crash. Okay, then again, if you see the higher time frame buying, all you just have to do is you wait. You don't sell at this point. You don't sell here. You go with it, or you go with the higher time frame, you buy. All right, it's as easy as that. It's as easy as that. Don't force the market, just flow with the market. When you start forcing the market, that's when you start having a problem. Okay, you flow with the market. Then for, let's say, okay, the higher time frames, the next thing I would like to talk to you about, because I explained with the stochastic. So let's, because the stochastic, what the stochastic indicates mostly is the momentum of the market, and the stochastic indicates the oscillation of the price action. Okay, the movement of the price action. So the stochastic basically indicates the retracement of the price action. It's unlike the, what's it called, the MACD, that indicates, most times indicates the reversal of the full trend. You understand? The stochastic, the MACD indicates most times the reversal of the full trend, while the stochastic indicates mostly reversals. If you check it, the stochastic trades on reversals. Okay, it indicates reversals. All right, so follow these simple rules and you will make your profit. So for the MACD, for you to get a signal of the MACD, this is how you get it. The signal line, which is the 10 moving average, the 10 day period moving average, which is this one here, located on the MACD, will have to cross over these volumes of the MACD. So when it's relaxing over the volumes of the MACD, then it's a signal for you to sell. All right, it's a signal for you to sell. Then when it's relaxing below above the volumes of the MACD below, then it's a buy. All right, so that's how you use the MACD. So the MACD will have to work together with the stochastic in order for you to get a perfect signal. All right, you have to get a perfect signal. So how do I get a perfect signal here? You have to pinch your screen to zoom out, like zoom out, so that it will be on the last zoom. All right, then you will not have to check, okay, it's on a downtrend, the market is on a downtrend. What's the location of the stochastic? Is in the, it has gotten to the oversold region and is approaching downwards. All right, and the MACD has aligned, is a buy, is a sell signal. Yes, everything is confirming that it's a sell signal. So what do? I will just have to go to the 1 minute moving 1 minute time frame and wait for it to also get to that 90 region. Once you get to that 90 region, I sell. The same thing applies to the what's it called? The same thing applies with the buy condition. When it's a buy condition, all you just have to do is you a buy condition. Let's mark this spot where there is a buy condition. You will see that the lower time frame will buy. The lower time frame will buy. Let's see. The lower time frame will buy. Will continue. Will always buy. Let's see. Well, let's go trace it on the lower time frame. Let's say 5 minutes so that we can easily detect it. See, you see, that's a buy. You see, that's a buy. So follow these simple rules, you will succeed. So the why I'm showing you guys this is because most times you just focus on the 1 minute time frame, you forgetting the higher time frame, not knowing that when it gets to that 1 hour, 4 hours, the market will go against you. Okay, let's say you enter a trade here, not knowing that, okay, in 1 hour time the market is going to fall, it's going to be a sell, because you're trading on the fragment of the 1 hour. So you didn't know that yes, it's going to be a sell. You understand? So you now went to enter a buy here, not knowing that the market is going to fall. Next thing, you get stopped out of the trade. You understand? So the simple rule is analyze with the higher time frame, then trade with a lower time frame for those scalping. You understand? So if you know you don't have enough money to trade on the higher time frame, all you just have to do is use your small $30, $50 to just enter the trade in smaller time frame, but you have to analyze with the higher time frames. With this, I think, yeah, you guys will do well the way I'm doing. All right, take this and I hope you guys profit from it. All right, thanks guys, and I'm open for questions. You are free to ask me question anytime. All right.